G Beyrouthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I actually present to you what happened in the last few weeks, and we try to forecast what is likely to happen the next few weeks based on technical and fundamental information. First of all, we like to start with what happened in America and also on the commodities. As you can see here, the Dow was actually over the last 2 weeks dropped by nearly 3%. 1% last week and 2% the week before. Of course, we all know about the spat between the US and China and the retaliation by each of those regarding trades. But we see here that the Nasdaq, which is a technology index, suffered more than the other two indices. The S&P 500 almost 3%. Now the volatility has gone up quite a bit. You can see here it's actually quite higher, much higher, over nearly 9% over the last 2 weeks. The US dollar over the last 2 weeks actually was up by 0.2%, and correspondingly the Australian dollar was nearly down by nearly 1% over the last 2 weeks. The euro weaker against the US in 2 weeks. And now in terms of gold, you can see that gold was up by 1.5% over the last 2 weeks. $23, approximately $23 over the last 2 weeks. Half of it, or nearly half of it, occurred last week. Of course, with turbulence around the global situations, gold becomes a star. And with gold going up, it is an automatic reaction to silver, and silver was actually up by 2.3% or 40 cents over the last 2 weeks. Most of it happened last week. Crude oil, still, even though it dropped by nearly 2% last week, over the last 2 weeks was still up by 2.6% and trading around 54 US per barrel. That is the West Texas crude oil. And by the way, if you're interested to trade other commodities such as wheat, soybean, coffee, orange juice, whatever, you can talk to us, call us, and we'll tell you how to actually trade those commodities. Now, in terms of our market, first of all, we start with the sectors. The ASX 200, which is our gauge for our market, is made up to a greater extent by the financial, as you can see here, and the materials. When both of these sectors go up, usually the market as a whole react accordingly. When those two sectors are down together, the market again react accordingly. Well, the last 2 weeks we've seen that the financial were down by 1.5%, and the materials, which of course include BHP, Rio and Fortescue, because of the iron ore price dropping quite extensively. Remember a few weeks ago, maybe a couple of months ago, it was trading around 120, and now it's dropped nearly close to 90 US per ton. And that of course is affecting the profitability of BHP and Rio, which happen to be the major contributors to the material sector. So when we look at all the sectors, we find that over the last 2 weeks as a whole, consumer discretionary was up, healthcare was up, was actually the star performer, followed by information technology, 3.6%. Now in terms of our stocks, going down this column here, we're looking at over the big picture the last 2 weeks, we find that Macquarie Bank was up quite a bit last week, but overall over the last 2 weeks was up by 1.6%. A question has to be asked, why did Macquarie Bank go up by nearly 5.3% last week? There must be a reason, so obviously we have to investigate that. QBE was up by nearly 2.5%, and look at Santos. Even though the price of oil dropped globally, Santos was up by 9.4%. And what happened to Woodside Petroleum? Woodside Petroleum also last week had a good performance. But then when we look at over the last 2 weeks, we find that Santos did very well, 6.7% over the last 2 weeks, and Woodside Petroleum over the last 2 weeks was down nearly 3%. Again, this information helps us to understand what is going on across all the sectors and how the various sectors affect the various stocks. If you want a copy of this slide, all you have to do is call us and we'll send it to you. Now, what happened on Friday? The Dow was down 2.4% because we heard about the retaliation that China intends to do against $75 billion of US import into China, where they intend to put some tariffs on it as a retaliation to what Trump is intending to do with a lot of import from China into the US. The S&P 500 was down 2.6%, and the Nasdaq, which of course includes the Microsoft, the Apple, which of course are affected quite greatly by the sanctions or by the tariff imposition. In New York, BHP was down 1.2%, and so is RIA, that is on Friday night. In Europe, on Friday, the Stoxx 50 index, which comprises most major European markets, was down 1.2%. In London, the FTSE was down 0.5%, and in Germany, the DAX was down 1.2%. And our market on Friday, we were up 21 points or 0.3%, and we were trading down to or up to 6,523. However, don't forget that that is down from nearly 6% of the most recent high that we've seen on the ASX 200 approximately 3-4 weeks ago. Best performing stock, as we've seen before, the Santos was up 1.6% on Friday. And CIMIC, which is the old Leighton Holdings, was up 1.5%. AMP down on Friday 2.9%, Worley 2.3%. And Telstra recovered 5 cents to $3.74. Now, gold on Friday was up by 30 US dollars, and the Australian dollar is trading to 76 US cents. We'll also give you 60.6 euro cents, 55.1 British pence, and 106 New Zealand. Bitcoin over on Friday was down nearly $400, down to 10,018 US. And that converts to approximately 14,854 Australian dollars, down 567 Australian dollars on Friday. Now, we also like to look at the volume. Volume happened to be a very good leading indicator because it tells you how the buyers and sellers react into the market. Well, first of all, we had over the full week major increase in the advances over the declines. However, when we look at the daily volume, there has been, relatively speaking, a major drop in the volume, with the exception of Friday, where there was some interest. The bargain hunters came into the market. But look at the advances over declines. It was really balanced between the buyers and the sellers. 28% of all the stocks went up, 26% or 27%, 26.6% were down, and 45% was steady and probably not traded. And the volume was slightly up, but still, relatively speaking, on a decline. So the market is telling us that people are a bit nervous. And of course, the big institution buy and sell, irrespective of what happens about the fear gauge. All right, now looking at the sectors, and we start with the American market. Of course, the American market is actually neutral, gone from very bullish 5 weeks ago to bearish, more bearish, and now neutral for the Dow and the Nasdaq, and very bearish for the S&P 500, according to our GB8 technical indicators, which is a mechanical system that I have designed, which helps us to look at 8 indicators, and from the indicators, some of them are leading and some of them are lagging. Collectively, we're able to forecast what is likely to happen in the future. So if you're going to trade in the American market, obviously the S&P 500 will be the one to actually go bearish on. Gold, still relatively speaking, very bullish, especially for the long-term investor. And silver again, so you look for companies, stocks that actually mine silver, and that would be obviously a good bullish trade for them. Oil, we will actually go bearish on oil irrespective of what happened to Santos and Woodside Petroleum. Again, if you want a copy of this slide, we're happy to provide it to you. All you have to do is call us. Now let's look at the Dow chart. This is the weekly chart, and we have 1, 2, 3, 4 red candles telling you it's very bearish. Now coming back to the daily, there is something very important when we study the technical analysis. That dark black line is actually a very important line. It is actually representing the 200-day moving average. And historically speaking, when the candles go below and stay below that line for a while, we are in a bearish market. Now, I expect that tonight the market in America is likely to continue to go down. That's what happened on Friday, by the way. The violet or the purple line is the 100-day moving average, and the orange is the 50-day moving average. And at the moment we're seeing the 100 is above 200, the 50 above the 100, and that is actually, relatively speaking, long-term trade is still bullish. And don't forget, the American market has actually gone up quite a bit in the last few months. However, we are entering a period where there could be some, relatively speaking, some correction. And we're going to really study that line very carefully in the next few days, few weeks. If it drops below that line and stays below it for quite a number of days, we are heading south, further south. Now, in terms of our stocks and sectors, we can see now that on the right hand side, 5 weeks ago, they are weekly. As you can see here, that's weekly forecast. We were very bullish in the market, a bit less bullish, starting to appear the bearish, more bearish, and now we are actually oscillating between neutral, bullish and bear. So there is a bit of nervous behavior in our market. Now, consumer discretionary is the only blue or bullish, as you can see here. Everything else is bearish. And the most bearish one is the material, thanks to the drop in the price of iron ore. And telecommunication also appears to be bearish. Again, well, we've seen Telstra dropping from $3.98 down to $3.70 something, 75 recently. So again, it's a time of cautious approach to our market. Now, in terms of our gauge, ASX 200, last week was actually turned to be a green candle. However, the highest point of that candle still below the highest candle before it, the one before it. That is not very positive. We like to see the green candle getting to a higher high to the previous candle. We haven't seen that yet. And if you look at the various daily chart here on the right hand side, you can see that we've got a lot more red candles than green candles. Last week, after the major drop on Friday the week before, we started to see the market recovering because people started to believe that there may be some hope that the market, the sanction or the tariff, that may actually end up in a reconciliation, which didn't happen because of Trump's obstinate behavior to the whole thing. Now, in terms of the stocks, if we are going to trade any particular stock at the moment on the bullish side, you got Santos is one company. We have West Farmers and maybe Woolworths. Everything else is bearish. QBE appears to be slightly less bullish, but still bullish. Everything else is bearish. So It is not time for bargain hunting, especially with today expected the market will go down maybe by 60, 80 points. We don't know. What happens tonight in America will be very important. And during today, we're going to be watching the futures in America. What is likely the market, how the market likely to open in America tonight, and whether it continues to go further down or recover during the day in America. All right, so that's all from us here. Now, finally, I want to tell you that with our CFD trading, we have closed the British pound versus the US. We made some money, and our $3,500 that we injected into our capital was 4,814 on Friday morning. However, you need to know that we are in a trade with Appen, that is APX, the trade code, and that is not doing very well at the moment. So, but we're holding on to it because we believe that company is likely in the long term to do well. So we're going to really see what happens today. Finally, we look at volume as well, and we see which stock is actually has performed over the week with major increase in the volume. Treasury wine, it's usually have a moving average of the volume over 50 days of 15 million. And on last week, it traded 20 million shares. So that's 132% above the moving average. We like to know why. On the bearish side, we've got AMP, high volume with lower decline, decline. And in terms of All Search and AGL, again, some reasonable increase in the volume. Our AGL is almost common, but that's nothing really to worry about. In the mid cap, if you are a speculator, Infomedia, Baby Bunting, Accent Group, BWX, Western Areas are all shares that had extreme volume over the week. Here on this column here, you see that's the weekly volume, and what happened last week, an excess of volume over the moving average. In terms of bearish mid cap, Media, Ocean Gold. It's interesting that gold was up and Ocean Gold was down, so with high volume as well. So that's not really a good company to trade. Mount Gibson, iron ore. Well, I understand why iron ore price shares are going down, and obviously various companies are doing badly as well because of the drop in the price. Okay, finally, our disclaimer. We don't know your financial circumstances, and therefore, before you take any action, please consult with us and consult with your professional advisor, because there is no guarantee. Everything we said today is of general advice only. As I said, nothing here is actually private, and you need to know there are possibility of making money, but there is also possibility of losing money. And if you have any questions, all you have to do is call us and we'll talk to you. You can send me an email, george@fssecurities.com.au. If you're ringing from overseas, you can call my mobile. I'm available almost 15 hours a day. I'm happy to receive your phone call. 61 first, you don't need the 0 if you're ringing from overseas. 61-411-259526. Happy trading and happy week.